Good morning, it's Harvey Jackson. Just going to get through some news items here. U.S. inflation data is favorable, but I wonder if it's just temporary. As the Iran war, it's in its fourth night of attacks. Iran has threatened to block more energy routes after President Trump has reinstated the U.S. blockade uh, on Iranian shipping. And there's been some attacks all around. Trump renewed his threat to hit Iranian power plants and bridges if Tehran does not return to negotiations to end the war started by the U.S. and Israel strikes since February now. Um, so the U.S. consumer inflation moderated, upside risk remain. So as the war continues, so the consumer price index increased 3.5% year on year in June, below the expectations of 3.8. But it's at risk for sure, excluding food and energy. And they always do these things, right? But it was only 2.6. But when you look at it in the whole, and Charlie Biello puts this information out every time there's a release. And again, I'm talking U.S., but everything that we do in Canada is basically in U.S. dollars. So our Canadian dollar being weak as it is, it just elevates the prices even exponentially, right? So pound of coffee is 127%. And we can just go through it all, but just dozen eggs 72% higher, fuel oil 60% higher in the last 7 years. It's just we know there's inflation. Uh, Staying on the topic here, China's Q2 economic growth cools to 3.5-year low as imbalances worsen. And some of it's the housing market, you name it. It's all there's stimulus, but it's just kind of buoying the economy up, but artificially for a little bit here. We'll have to see how this plays out. Staying on high price stuff, fertilizer prices had this little pop. I was with a client and I just brought up the Gulf prices swaps, and it's not perfect, but it just gives you an indication. And the other part that I bring up, sure, we went from here to here, but we had Canadian dollar that was substantially higher back a year ago than it is now. So you can see these prices. It didn't get back to the same prices there because our Canadian dollar is weaker. And I thought this was interesting that even some of the Canadian media can't even pinpoint why he hired a U.S. Democrat. And there was no such position, but he obviously needs to align himself more with the U.S. And well, primarily, I guess he's got mostly invested in U.S., so that's why he might have to hire someone there from there as well. So weather, you can see that it's right on the top of the prairies are staying wet, but this heat dome is in the center here for sure. Let's just have a look. It doesn't seem to. It didn't get as hot as it was before. Now it's going out to next week. It starts to cool down a lot faster. So you can see here that it's on and off here, but there's still. It's not as hot as it was, and if there's moisture, you're probably okay. And there's differences between the weather models, and that's the other thing that I keep calling out. There's European versus the GFS and GEFS as well. Quick look at the markets. Canola is trying to gain back everything it lost yesterday. Currently trading 784.90. Soybean oil up a third of a penny at 71.79. Palm oil fractionally up. Crude oil is up another half a dollar barrel, just shy of the $80 barrel, 79.17. Soybeans up 4.75 cents at 11.95. And the wheats are all up. So spring wheat is still lagging your hard red winter and your Chicago. We're up 16, they're up 23 and 19 and a half, and milling wheat is exploding in the French Matif wheat. Corn's up as well, Canadian dollar's up. Canadian dollar actually had a strong day there yesterday, but you can see that it's just kind of one down day, and then we're trying to trade right to the height of that same down day. Still, you have to get to just above 800 to say that you're going to make new highs here. I just don't know what's going to make it new highs here. It's going to have to be a problem with the soybean crop in the U.S. I don't believe it's a crude oil play all by itself. It's a crop situation here. Rapeseed. This is the one that's breaking out. So this could be the one that's actually pulling us on the canola side, because this is probably the closest related crop now. And there is obviously problems with all that heat that was accumulating. You're getting to full maturity and some harvest probably starting in a lot of the European areas there now with rapeseed. I thought I'd just screenshot what the difference is right now, and that's minor differences, but if European rapeseed continues to rally, we might get pulled along. Soybean oil, not the same kind of move that we're seeing on the canola and the soybeans. The soybeans are moving, but I think the European rapeseed is actually doing most of the work for us right now on the canola side. Crude oil doesn't look, when you see that big move that we've had there, this doesn't seem to be a big move, but it's still a big move and it's substantial. It's starting to impact pump prices pretty strong because you're making diesel fuel on the September contract. It's actually making new highs on the September contract, but when you look at it as a whole, there's still your front month. It still has not made the same highs that we've seen here. Gasoline, it's not the trend that we want. I can tell you that. Here's your Canadian dollar. We had a large bump there. We went from basically up to the 78.6 retracement value, which is a pretty good size move. Here's your US dollar index. Here's the wheat. So what I want to point out here is the wheat, just a measured move from its high to the low. We got to the 50% retracement value, and current still trading above your medium-term moving average. But when you look at the Kansas, we're up to 61.8. So you need to move above that 61.8. 61.8 is one of those pivot points. If the market makes it through there, there's a good chance that we can get back to those values. So it needs to move through there. So the positive thing is Chicago's already moved ahead into the 78.6. So there's if their classes are going to be pulled together, Chicago's already moved in there. The Minneapolis is only at the 50%, and yeah, so we have to stick it and keep moving. And here's what's happened with the French wheat. It's gone that same kind of timeline. It's already exponentially already moved ahead, and now we're looking at this move, probably very possible another let's call it $14 a ton higher euro. So that's substantial. It would be it would give it a little bit of a boost here. And you look at corn and you go, oh, well, that's boring, right? But it's still, the trend is your friend here. I thought this was interesting. I saw this on X, and they were just talking about the timelines when the stocks to use when it goes below the 10% and above the 12.5%, whether it's a bear or a bull market, and what happens to the price. So the price is down below moving low here, and this is the shift here. So hopefully, if this is all true here, we could be pulling ourselves into a bull market. Conab came up with their numbers, and the one thing that I want to point out here, and it's not well illustrated here, but the exports remain the same on both the corn and the soybeans, but especially with the corn. So the ending stocks, with production going up, there isn't as many available stocks for the export market. They kept the exports the same. So the ethanol program is going to chew up a lot more of that corn stocks in domestically. So if there's a kind of a bright spot there, it would be that there's going to be some stocks available, or no stocks available from Brazil, or not as much as one would think with increasing production, because they're going to use it up themselves domestically.